Hello, everyone. Welcome, welcome, welcome. We are so happy to have you here today. This is going to be so much fun because we have this amazing gentleman, Tim Yurek, with us, who's quite, you'll love him. Let's just put it that way. But I did want to let you know, hey, look, everyone, this book's coming out in about a week or so. I have to go to another proof because there's a few things, but I worked on this for a day and a half so far, and it's really a very fun book. Uh, I I actually was reading it and getting very involved in it, and I actually started crying at one of the chapters I was reading. I'm like, oh my God, I made myself cry. Ah, so emotional. So anyway, that'll be out in a couple of weeks, and Amazon's a great place to buy books. So thank you everyone for coming on. Hi, Freddie. Great to have you join us. Lisa, we're happy to have you here also. Today we have the amazing Mr. Tim Yurek, who is a highly accomplished financial consultant, veteran, and thought leader in his industry. As the founder and CEO of Tier 1 Capital, he has spent over 35 years helping thousands of families across the country achieve their financial goals. Very super important to all of us reach our goals or close to. His experience includes growing businesses, attracting, retaining top talent, planning for business succession, and converting business equity into cash. Yes. Tim, Tim's success in the financial consulting field has been recognized on a global level, as evidenced by his seat at the Million Dollar Roundtable, an independent association of the world's leading life insurance and financial services professionals. Congratulations, Tim. He has also
Thank you.
he has also earned the distinguished honor of being designated as the top of the table within the organization, which places him at the top 1% of professionals in his industry worldwide. With his extensive experience and impressive track record, Tim is well positioned to offer valuable insights and strategies to his clients. He's committed to helping them achieve financial freedom by minimizing risk, increasing accessibility, and putting them in control of their money. His experience and dedication have earned him a reputation as a trusted advisor and mentor to many, and his insights have been featured on major media outlets such as Bloomberg TV. So welcome, welcome. We are so excited to have you here, Tim. And I'd really like to, if you have time, sometime during the hour we have here, I want to hear about your round table. Is that like King Arthur's?
No, the Million Dollar Roundtable. Well, first of all, thank you for that introduction. Uh, the Million Dollar Roundtable was formed, I believe, in 1932 or 1933, and it was basically, in today's terms, we would refer to it as a mastermind
Mm-hmm.
of the leading financial services producers back in the 30s, got together and they had a meeting. And then they realized over time that there was a group that was doing much better than the average group. But by the way, the average producer in the Million Dollar Roundtable was doing very well, comparable to their peers. But then there was a subset that was just really knocking out of the park, and that became what was known as the top of the table.
Uh,
So realistically, it's just a place where some of the leading professionals in the industry get together and share ideas,
oh,
basically.
right. Yeah, that's like a mastermind. Napoleon.
Correct. So, how I came into financial services, not that it matters maybe at the end of the day, but I have a degree in economics, and it became apparent to me that if I didn't want to go through the teaching path of being an economics professor, um,
Mm.
there was three paths. One was banking, one was the investment world, and the other was insurance. And when I was trying to figure out what I wanted to do, I had done an internship with an investment firm. Peggy, you'll probably remember this name, Dean Witter.
Oh, yeah.
Well, Dean Witter doesn't exist any longer, and so I did an internship with Dean Witter, and I realized that the investment management game was just not something that that was not my cup of tea. Um, I didn't see myself as a banker, and then the only other track was insurance. So the problem for me was they used to have a test. It was a psychological test that you had to take, and if you passed it, the company that you had taken the test with would give you a contract or allow you to study to get a contract. Well, the problem that I had was I couldn't pass the test because every time I took the test, it was called a LIMRA test, um, I failed it. And basically, they were saying that I would never be successful in insurance if I didn't pass that test. So nobody would hire me. So a funny story is that one of my best friends from college, he had taken the test and he killed it. But he had no intention of getting in the insurance business or financial services for that. He was going to take over a business that his dad had started. So the last time I took the test, I just said, okay, how would Louis answer this question? So everything that I would have done, every way I would have answered the question, I ignored. And I said, okay, how would Louis do this? And lo and behold, I passed the test. So uh,
Oh, that's great. I love it.
I haven't told that. This is probably the second time in my life I actually told that story. And the first time I told it was to Louis after I passed it. So anyway, but now this is back in the early 80s.
Mhm.
And unbeknownst to me, there was a convergence. It used to be that if you were in the investment business, you didn't sell insurance and and you couldn't sell bank products. And if you were in banking, you couldn't sell insurance or investment products. And if you were in insurance, um, that you couldn't sell investment or bank products. This is legislation from the 1930s, the Great Depression, which they said what caused the Great Depression was they created these firewalls. It was called the Glass-Steagall Act. And Glass-Steagall forbid investments from getting in the other two industries and insurance getting in the other two industries, et cetera. So back in the 80s, they took down the firewalls and they sort of did away with Glass-Steagall. And now you had what was originally going to be thought of as um, they were originally going to be thought of as financial services supermarkets. Hold
Hmm.
on one second, please. I apologize. Yeah, no, tomorrow.
Here we go.
Um, so So when I got involved in financial services, a good friend of mine said, Tim, and he was a business owner. He said, from my experience, you're not a transactional person like a banker or an investment person, but you're a relationship oriented person. And that would serve you well in the insurance business. So you should probably try that track. So that's what sort of led me down that path. But as these industries started to converge, it was about 6 or 7 years into my career. And lo and behold, as that happened, now insurance people were selling investments and banking services, and bankers were doing investments and insurance. But they were all in transactional businesses, and I was in relationship businesses. So I was working with people on their insurance, creating this great relationship. And all of a sudden now I'm able to talk to them about their investments. And that served me, I would say, fairly well over the years, because I'm a relationship person. Um, so all that being said, that's great. And that's where we are. But then I got this epiphany. And the epiphany was that in 1993, I realized, despite the fact that I was doing fairly well and I was doing $1 million roundtable production, I was living pay to pay because nobody ever taught me how to use my money in a sustainable way.
Okay.
And well, think of it. I think a
No,
lot of us could, there you go, right? So, Peggy, a lot of us could empathize with this situation. When I grew up poor, so when if I wanted something, if I wanted a new baseball glove or if I wanted a new pair of sneakers, I didn't go to mom and dad and say I need a baseball glove or I need sneakers. I had to go out and earn money to buy it.
mhm,
And I'm not saying that's a bad thing. In fact, I think it was really good. But the problem with that is that you're basically saving money to buy a baseball glove and then spending it down, and then saving money to buy a pair of sneakers and spending it down. And you're not creating any continuity or earning anything on your money. And in 1993, I realized, despite the fact that at that time I was making 7 times more than what my dad ever made in a year, and he had 3 kids that he raised, and I had none, and I was living pay to pay. And there were times where I borrowed money from my father, who was retired, no pension, just Social Security. I was borrowing money from him to pay my mortgage. And that's when I realized the amount of money you're making is not the issue.
nope,
The issue is how much money you control and how much money you're keeping.
you bet.
And that was a huge epiphany for me. So it
And how
became
old were you at that time, would you say?
so I was 31 years old
Yep, that's
when,
about when we all start getting it
yeah,
or start learning it.
right. So what I did was I changed the way I was using my money.
Mhm.
And when that happened, all of a sudden I saw my bank account growing. And I was like, oh, okay, there's something to this. And then I found other people in my industry who had the same experience and developed similar processes. And then we started to collaborate and developed this process, which I call the financial golf swing.
Ah,
So all the financial services industry, banking, investments, insurance, they all manufacture products. Those products are the equivalent of the golf club. And when you talk to a financial advisor, what are they talking to you about? Basically, it's something like this: Peggy, show me your stuff. Your stuff stinks. My stuff is the best. So I'll paraphrase this in a golfing analogy. Show me your golf clubs. Your golf clubs stink. Come to my pro shop. I'll sell you a new set of clubs. Well, if you know anything about golf, owning a new set of clubs isn't going to make you a better golfer. But if you practice how you use the club and improve upon that, that changes things. So we always say the process of how you're using your money is way more important than the products you have. And that's when the rubber was really meeting the road for me because I was having tremendous impact on my clients. And that was, is to this day, the most rewarding aspect of my business. Literally going into a business that is having trouble with cash flow. And by the way, 61% of business owners struggle with chronic or cyclical cash flow issues. 69% of business owners either lose sleep or sleep less due to cash flow concerns. And
So,
what, but let me ask you, let me say this. Here's what I've learned in 40 years of doing this. All of these cash flow issues are self-inflicted because it's how we're using our money, the financial golf swing. It's not the amount of money we're making. And when we share this information with our clients, the ones who get it, they get it so well that it literally transforms their lives. I I have one client that funny story. He didn't want to meet with me because he said, Tim, I don't want to waste your time because I have two financial advisors and I meet with my CPA once a month. What are you going to show me that these folks haven't? I basically said, well, listen, nobody has the market cornered on good ideas. Maybe I can share something with you that will make sense. But if I can't, Jeff is a good friend of mine. He's a really good friend of yours. So I'm a friend of Jeff's. You're a friend of Jeff's. If the worst thing that's going to happen here is maybe each of us will make a new friend. And he said, come on over. And so, off the throes of that, when I met this guy, he had a $5 million net worth. He had $1 million in a retirement account. He had $2 million in business equity and $2 million in real estate equity. What am I going to show this guy? Well, it turns out he was also paying his quarterly taxes with draws on his credit line. And then he would max out the credit line. The bank would make it a term loan. They would term it out. And then he'd open up another credit line. And I said, boy, the banks must love you. He giggled and he said, well, that's just the way I do it. I said, let me ask you a question. How much income do you make? And at that point, he was 41 years old, $650,000. And then my next question was, well, when you were in college, how much income were you hoping to make? And he said, about 150 to 200,000. And I just burst out laughing. And he goes, what the heck's so funny? And I said, isn't it ironic that you're making 3 to 4 times what you ever dreamed you could make in college, and you can't pay your darn taxes without taking a draw on a credit line? He said, well, that's just the way I do it. I said, does that make it right? He said, what would you suggest? I said, what's your process for being in control of your money and your cash flow? He said, I don't have a process. I said, you know, on paper, you got a net worth of $5 million, but the reality is you can't put your hand on $50,000 to pay your taxes. So we started this process in July of 2019. We put a plan together because there was some vacations and stuff where we couldn't get together. But bottom line was we put a plan together in October of 2019. And one of the great things was he said on July 8th, he texted me and he said, hey, Tim, I just want you to know I left Brian's office. Brian was his CPA. And he said, we filed our 2019 taxes on extension. And I wanted to share with you the fact that I had enough money set aside to pay our 2019 tax liability. But better yet, I have money set aside to pay our September quarterly, our January quarterly, and what we estimate we might owe in April for our 2020 tax obligation.
mhm.
Thanks for all you do for me and my family. Now, if we stop there, that's a pretty good success story.
Yeah, but you didn't tell us how you resolved it.
How we resolved it was we looked at, so his biggest issues were he had 4 children in private school and he was paying that a certain way, and we changed how he was doing that.
Mm-hmm.
He was also putting extra money on his real estate loans because he was in a race to get out of debt. And I said, does this make sense that you have, and at the time, real estate loans were like 2.75, 3.25%. I said, does it make sense to pay down a 3% loan only to get a credit line at 6.5%? Now we all look at that, we're laughing, right? And this is a smart guy. But it was just the way that I always say it's the way we've been trained by the financial services industry to use our money. It's detrimental to us and beneficial to them. And he's like, okay, that makes sense. So we had a 9-month transformation. Now, fast forward to December of 2022. It's now 38 months after we started working together. He grew his business from 3 locations to 7. He owned the real estate on those 4 additional locations. He and his wife purchased a vacation home on the Delaware shore that cost over $1.5 million. All of that, you need down payment money. It's all capital intensive. Each one of his businesses, because of the switch that we flipped for this guy, of him being in control of his money, each business had its own checking account. And between that and the accounts that we had originally set up, he's now sitting on $1.8 million of capital that he has access to at any time. He's bought some really good properties since that time because he had access to it. He's bought other businesses because he had access to capital. And I always have a saying that when you have access to capital, opportunities will find you. And this guy is a testament to that. And here's the moral of the story. This gentleman always had the ability to be in that position. He was just using his money incorrectly, and he was using his money in a way that was detrimental to him and beneficial to the financial institutions. We view things through the lens of our clients always being in control of their money. And it doesn't have to be only on the things we do or the products that we sell. We sell the same baseball bats, or I'm sorry, the same golf clubs as everybody else in the financial services industry. The difference is we talk to our clients through the lens of showing them how to use their money in more efficiently and effectively. So we take them down to the practice range before we take them to the pro shop, basically.
That's great. I have a question for you.
Yes.
So those 2 financial advisors he has, does he still have them?
Well, I'm glad you brought that up because in December of 2022, when we met, it was me, his CPA,
And
and
Jim,
the client.
mm,
7 o'clock in the morning on a Friday morning in December, we were meeting in my office, and the other 2 guys were fired, and rightfully so. They weren't giving him advice. See, this is the big what's the word? It's the elephant in the room. When you talk to a financial advisor, you're saying, "Hey, I need some financial advice." They're saying, "Oh, I want to manage all of your money." You're talking financial advice, they're talking AUM, assets under management. You're talking to two different. You're speaking 2 different languages. And in my talk today that I gave at this business summit, basically I said, you want advice, you think you have a problem, and that advisor is the solution to your problem. What you don't realize is that that advisor has a problem as well, and you're the solution to that advisor's problem. because they have to pay the private schooling for their children. They have to pay for their Lexus payment, and they have to pay for their vacation that they're taking the family on. And you're the way they're going to do that.
Hmm.
And a lot of people see the logic in that, that analogy.
Who sees that logic? Because
A
it's
lot
not.
of the people that, yeah, all the people that I deal with, that I talk to, they're like, "Oh my God, I never thought of it that way," but it's true.
Oh, it drives those kind of people, no offense to them, I know they're educated, but what really bothers me is they get paid on the gross of the account, and I would only pay somebody on what they made for my account. And if they had to make money for my account, it would be a totally different story. And I just had
Right.
one of my friends just called me and said, they keep changing her accounts, but it's not growing. And I said, yeah, because they get the fees.
Exactly. Exactly.
I want the fees.
You know, you mentioned something about they're educated. Education doesn't mean smart. And you know who
No.
taught me that? A gentleman who graduated high school and went directly to the Navy and didn't have any college education. And he always used to say, just because you have an education doesn't mean you're intelligent.
Yeah,
And, you know, that was my dad, by the
story
way.
behind that, but yes.
Yeah.
Really. Mhm. Yeah, when I got married, my brother married a gal that he met in college, so they both graduated. I'm a college graduate, but my husband was a high school graduate. And we used to play Trivia Pursuit, and he always won. Joe always won. The rest of us are going, how do you know that stuff? Like, yeah, so like that. Yeah, so are you ready for questions, or do you have something else?
Um, yeah, so the bottom line is this. It's not what you buy, whether it's real estate, cars, whatever. It's how you pay for it. And when you're in control of the finance function in your life, it's a different life. We have a saying, whoever controls your cash flow controls your life.
Yeah.
And, back in 2008, those of us who could remember that, the first thing when the next shoe drops in the financial industry, the first thing that's going to dry up is access to capital. And that's exactly what happened in 2007 and 2008. You know, when Wachovia got taken over by Wells Fargo, the first thing Wells Fargo did is they came in. Wachovia was really big in where I'm from in Pennsylvania.
Hmm.
And Wells Fargo took over Wachovia. And the first thing they did, almost on the first day they took over, they sent out a letter and it basically said, Peggy, we appreciate your business all over the years, but you have a $100,000 credit line and there's $20,000 of unused uh, credit. We're going to end that today and we're going to make your loan a term loan. It's no longer a credit line, it's a term loan. And if you don't like that, you certainly have the freedom to go to another financial institution. And that's what happened. I mean, if you're a business owner and you have a credit line, or if you own real estate and you have a credit line, especially at that point in 2007, 2008, you weren't going to come up with $80,000 to pay off your credit line. So they were forcing people to do what was in the bank's best interest, but not in the customer's best interest.
Right.
And so my point is, in the absence of building your own pool of capital, the best way, the first thing that's going to happen when the next financial crisis occurs is you're going to lose access to capital. And that's when you're definitely going to need to have your own pool of capital that you could tap into. And we tell our clients over the next 10 years, you're going to have two opportunities that you're going to want to take advantage of. and you're going to have two crises, whether they're financial or medical, that you're going to need access to money to bail yourself out of. My job as your advisor is to position you so that those crises don't cripple you. And also, we want to position you so that you could take advantage of the opportunities if you choose to do that.
Great. So does anyone have any questions? I know Chris, welcome, and you weren't here for the introduction. I think Kathy missed that also. But do any of you have any questions for Tim? And his financial services, he's also, you missed that he's on the top of the table. That's not what it's called, but I just picture you dancing on top of the table.
Yeah, I don't. I want to, I want to clarify that I don't dance on tables or with a pole for that matter.
Oh, okay. Yeah, but that's really good exercise. People think it's something, and what it really is that pole is
Yeah.
exercise. And if you can climb up that pole upside down, you're in really great shape. Yep. Yeah. Anyway, so do you do a lot of this through your insurance policies?
Well, I mean, so what we do is we find money that's already built into your cash flow.
Mm-hmm.
And you think it's money that's moving you forward, it's actually holding you back. And that's what we did with that gentleman initially. Showed him a better way to use his money. We found money that was in his cash flow. I mean, you think about it, most of his savings was in a retirement plan.
Right.
Well, what we did, and it was inaccessible. So what we did was he reduced how much he was putting in his retirement plan
Why was that inaccessible?
because he would have to pay tax or a penalty, or he could borrow, he could take a policy, he could take a 401k loan, but he's limited to $50,000 or 50% of the account balance, whichever is less.
He's
And he
not
could only, what's that?
he's not in an account where the account could do the investment straight out of the account. So
He didn't have that
You guys didn't
and he was the
convert it to a
business owner.
self-directed 401k?
Yeah, he didn't have that, Chris.
oh,
He had a boilerplate 401k agreement. Again, think of it this way. You're real estate investors, so that part of it's important to you, right? But if you're getting a 401k through a financial advisor, they get paid to manage put assets under management. Every dollar you take and put into real estate is a dollar less they're getting a fee on. So they're not going to do the things that are beneficial to you unless you request it. This guy didn't even know that was possible.
oh my God. He should read this book, Build Your Nest Egg. I know he's well off, but certainly he should educate his four children. That's what it's all about. The book's all
Yeah,
about
for
educating
sure.
children. So Kathy and Chris are both in the insurance industry. I don't know if Freddie is or not, but didn't know if you guys have some questions for Tim or thoughts or
I'm curious what your take is on premium financing. So I met somebody who was trying to sell that big time at an event we went to. And so I'm wondering what your take is on it.
Um, well, I'll tell you this. I've never recommended one. Um, one of the things that troubles me is that about premium finance is that they use a product called Index Universal Life,
Mm,
which I don't believe is a very viable product. I think when you use Index Universal Life and combine it with premium finance, you've introduced two levels of risk that the average insurance prospect doesn't need to have in their lives. I mean, since when is it appropriate? Since when is it right to introduce risk into the insurance equation?
Never.
Right? I mean, why do we buy insurance? We buy
For
insurance
safety.
for safety, right? We buy insurance on our house in case the house burns down. We
Mhm.
buy insurance on our car in case we get in an accident and it's our fault and God forbid somebody is hurt or killed. We buy that for protection. Same
Right.
thing with life insurance. I buy life insurance so that if something happens to me, my family's taken care of. Why would you introduce risk into that equation? It befuddles me. But then you have people doubling down. They take the index universal life, which introduces risk, and then they double down by adding the premium finance aspect to it. Personally, Kathy, I think it's a way for an agent to make a lot of money at the expense of the client. I don't see much value in that.
What
I'm
is
sure,
Me neither.
what
what's
is
that?
what is premium finance?
Premium finance is where your the insured borrows money to pay the premium for the insurance on the hope that the cash value in the future will be great enough to wipe out the loan at some point down the road. And they use a product that illustrates well but doesn't deliver. That's the Index Universal Life product. And by the way, Kathy, I don't know if you've ever done any analysis on this, but every analysis that I've done was that the best you're going to hope for in the Index Universal Life is what you're going to get in whole life anyway. So why introduce the risk? Why take all that risk when the best you're going to get is a guaranteed product? So,
Yeah.
just to me, it doesn't make sense. So
To me neither.
hopefully, does that make sense?
Yeah,
My,
It
you guys
my
does.
are in the
answer?
same boat.
Yeah. Yeah. We're
Yeah.
on the same page for sure. I'm just
Sure.
trying to figure out how to save the people that are buying into his sales pitch.
I'll tell you what, for free, I'll talk to them.
Okay.
Seriously. Yeah, you can
Okay.
talk, you can let them know that you spoke to somebody who's an expert on this, and I would gladly, I hate, listen, I think insurance is a really valuable product,
Hmm?
Hmm.
and I don't think people should get burned buying it.
I agree.
So,
It's supposed to be an asset if you buy the right policy. And as Kathy and I have talked many times about how to make it grow and how to use it to invest and make it grow even more and keep ahead of inflation. I mean, that's the whole thing's keep it ahead of inflation. And most people never even they don't think about inflation every day. Maybe lately in the last couple of weeks, they're thinking about inflation every day
right.
because it's being thrown in their face. You've got to stay ahead of the game.
Yeah.
Even though you could be a great investor, but if you're not investing in the right kind of assets, you're not going to stay ahead of the game. Put your money in the bank and hope is not a good, it's just not a good strategy.
Hope is not a plan, right?
It's totally not a plan. I wrote a
But
whole chapter
Kathy,
on that.
if you want to contact me, Peggy, you'll have my contact information
Yeah,
in the
I have
show
it all.
notes.
Sure.
Yeah.
Yeah,
So I would gladly do, no cost. I mean, I would, and it won't be the objective is not to talk the person out of it. The objective is to properly educate them
Right.
so
exactly.
that they could make an informed decision.
Which is why we
Hmm.
have this show on every week, because we want people to learn and get enough information that they could at least set up an appointment to have a further deeper dive.
Exactly.
Kristen, do you have any thoughts?
Hey Peggy, nice to see you.
Great to see you. I knew
Honestly,
you'd
I
be
got here a little bit late, and so
okay.
I missed the whole core beginning. Um, So that probably puts me at a bit of a disadvantage to ask an intelligent question.
Well, Kristen, I'll state this. What you missed was the flowery introduction, and I am not. I'll tell you what, if Peggy wants to go through that introduction again, you can have at it.
He works at financial services and he's won several awards, the $1 Million Club and is it called the
Oh, I
Top
was kidding. I was
140?
kidding.
No, but he's in the same service you're in.
Financial services, and the focus of your business is mainly cash flow using
Yep.
Insurance products.
insurance product. Okay.
And
Primarily insurance, but the reality is it doesn't matter. Whatever makes the client where they're comfortable. Some people aren't comfortable with insurance, and I'm fine with that. We sell all the products so they can do whatever they want.
what are all the products?
Investments, we do, like CDs, bank products. We can do all the financial golf clubs. But again, that's just the club. What we're teaching them is how to use it and how to save more money than what they think they can currently save.
Okay. What about you, Freddie? I see you thinking. I can tell because you've got this little right here. That's the
No,
sign of thinking.
just learning, taking it all in. Not very informational. Not in the financial services, in real estate. But just definitely looking forward to following Tim and just learning as we go along.
Good. How
Yeah.
long have you been in real estate?
A little bit now, maybe about. I was doing flips for about a while ago, maybe about 6 or 7 years ago. The last couple of years been with a more experienced group that focuses on multifamily investing. So I met you at the LA family office. So
Yeah, and
I'm trying
Beverly
to get
Hills.
on your
Thank you. Thank you.
I'm here.
Well, you should meet Chris DeSell. He's quite the multifamily investor.
Look forward to it.
So the two of you ought to have a conversation. He's quite successful, and he built his portfolio by investing with other multifamily
Great.
companies who
Chris, look
had
forward
such
to
great
connecting.
returns that he could go off on his own.
Wow.
Yeah, truly.
Wow.
That's why we love real estate. It just keeps on giving.
Yeah.
It's like Santa Claus. So great. Anybody else have any questions? How about you, Lisa? Do you have any questions? You know,
No,
I'm going to ask you
sorry. Hi.
always going to ask you because you're always here to educate and learn. Be educated
Yes.
and learn.
Thank you.
And
Would be interesting. I like insurance,
mhm.
but I just need to wrap my head around a lot of things.
Okay.
Be sure to read the book Becoming Your Own Banker by Nelson Nash.
Yep.
Thank you, Kathy.
And Build Your Nest Egg by Peggy Beauregard. It'll be out in a couple of weeks.
Well,
that's
yeah,
good.
Need to read
Nelson was a very good friend of mine. And I met him in 1997, and we developed he was actually a mentor of mine.
Oh,
So
nice. Yeah,
I'm
he's
sad I never got to meet him.
You didn't?
actually, in the first edition of his book, he mentioned me as in the acknowledgments.
Oh,
Oh,
nice.
Wow.
And I don't know why, but he took me out after that.
Oh.
Well, because he can only dedicate the book to you once, then he has to dedicate it to other people next time.
oh,
It was just a second edition, right? Of the same.
Yeah.
Another edition. Yeah.
Peggy, when is your book coming out?
Well, ran into some problems. I worked on it for 5 hours this morning, and I'm gonna have another proof, so about 2 weeks.
Oh, congratulations.
Yeah, and it's called Build Your Nest Egg, Discover the Magic of Money and Investing. And it's just the basics because it's for parents to read. Oh, I don't know how to get that to work. To get the parents
Oh.
to read to their children. We talk about credit versus debt, but it's really debt versus debt, right? But
Mm.
like like Tim was talking about, they call it credit, but it's not credit. When you have a credit card, that's a debt card.
Mhm.
No credit involved. How much you could spend? Oh, well, that's just bigger debt. So anyway, I just go into the basics of money and how money works so that parents can teach it to read it to their children so parents can learn it too. So it's like two-way. The kids are going to ask questions. What does that mean? And the parents will have to like do a little investigation. And I
Love
actually
it.
have both Nash and whatever, I forgot the other fellow that wrote the other book, the Rockefeller book. I have
Eric
both.
Oh,
Gunderson.
Yeah.
Garrick Gunderson, yeah.
Oh yeah, Gunderson. Yeah, I have both of them in this book. Because at the end of every chapter, I have a quote, a thinking time, a call to action, and then what I call a wealth builder. So the books are the wealth builder, or it could be a YouTube or something on Google that you can go investigate. Like,
Wonderful. That's terrific.
it's fun. I
So,
try to make it it's, I'm not, most people will look at it and say, this is not fun. For me, it's fun.
I bet it'll be
well,
fun for me.
Yeah, I think it will be. Well, Kathy edited one of the chapters, so
Oh, nice.
Mhm.
yeah.
Peggy, let me ask you this. When's your next book coming out?
You mean this one that I got right now?
No,
I,
no, no, the next one.
I've already got the first 2 pages of it started.
Wow, that's great.
It's,
I was being facetious, but
yeah,
um,
but guess what? Because this was supposed to be a book for children, but I couldn't dumb it down enough for children. So I had a couple of ideas and I've started, going to do a children's series. And I just need to get somebody like Jim McGrath to help me. He created Frog Leapfrog, whatever that was called, which is a
oh yeah.
yeah, he created that. So I thought I would call him and see if he could help me do this book because I know there's books out there. I just have to look at them where you push a button and the button will talk.
Mm-hmm.
So I'm sure that's quite common, but if you do something like, for instance, a penny, right? You say, this is a penny, it's worth 1 cent. And you push the one that says, this is a nickel, it's worth 5 cents. But it needs to talk and tell you, needs to make a noise so that kids have the visual and the hearing and the touch, right? Those three things are really important for people to learn. And then eventually they develop what they like best. With TV, most people are visual because we got that when we were really young, like
Mhm.
that. So I'm looking forward to getting that. I call them the golden book series because most of us had those golden books when we were,
Hmm.
right? Yeah, like that. So
Did Piggy freeze?
I think so.
Oh, I was waiting for her to say something like, is it coming?
So if any of you are in Southern California, there's a multifamily event, two of them actually, tomorrow and the next day in Carlsbad. If anyone's interested.
Oh, nice.
Yara,
What's that?
the AVR resort in Carlsbad.
Yeah, I think so.
Yeah, I've been there. It's really nice.
Mm. Where do you live, Tim?
I'm in Northeast Pennsylvania. Your your last name is a very common name up here.
It
Oh,
is?
Yeah.
Oh, interesting.
I don't think I've ever heard your last name before, Kathy.
I hadn't either before I met my ex-husband.
Gonna say I grew up in New York, and Kristen Berman is a very common name where I go. So
Really?
yeah.
Um,
Wow. Now that's really surprises me.
So, but nope. Where are you from, Kristen? Are you from out here?
Yeah, from California.
So you're the one? Because it seems like it's such a transient place. It seems like everybody's from somewhere else.
It's funny, most people I know are native Californians,
That's
but
cool. So,
there's a lot of, I guess, of both.
Where in California are you?
I'm in Old Agora, which,
Oh, okay.
do you know where Malibu is?
Uh-huh.
It's just right over the canyon from Malibu.
Oh, okay.
he
Nice
takes your
area.
helicopter to the beach.
Yeah, these days with all the road closures from the fires
I
and
know. Can't get anywhere.
yeah, yeah. Yeah, it's a horse community, so that whenever there's a fire, it's really rather dramatic because a lot of people with have a lot of livestock down like the
Yeah.
one, literally the one road, and then there's even like a one-lane bridge, so the traffic when we've got emergencies is really problematic.
Do you ride?
I ride, but I don't have my own horses on my property.
Okay, cool. Sweet. So I grew up riding. I love it. So
Yeah, it's one I love horses.
yeah.
They are a lot of work
Yeah, I know.
to maintain yourself. Yeah.
100%. So, but they're fun.
Yeah,
So,
it's funny. My oldest son is possibly looking to move because they're having a fourth child, and he was looking at Old Agora, which thrilled me to no end. Except that his the home they were looking at has a full stables, and so he said, "Yeah, the problem is his wife really wants horses and other animals as well, and he doesn't." So he's like, "Yeah, how am I going to say no to that if we have a stable?" Like, well, you don't.
Mhm.
yeah. So,
Oh, he's like, there's so much work. I said, yeah, well, you're gonna have to hire someone to do it.
yep. Do you know Horses in the Sun by chance? The series? It's a
No.
Topper show series. So it was based in my hometown. And my
Oh,
nephew is their announcer. So it's the feeder system to the Rolex series. So
oh wow.
if you're into jumpers at all, so
Very nice. Well, I don't know if Peggy's coming back or
I
not.
don't think so either. I wanted to hear a little bit more about the book and see who did the drawings and stuff.
Oh, she's
There
Oh,
she
there
there.
she
is.
is.
Bravo.
I lost electricity,
Oh,
Where are
and
you?
not just once, but twice, three
oh.
times. Thank you, everybody, for sticking around.
Absolutely. Thank you, Peggy.
I'm thinking, did you all get lost? Okay, so we're like at the top of the hour. Does anybody have a last minute comment, or Tim? Because we really thank you for being here. It was really helpful.
Well, hopefully, I appreciate it, and hopefully, people got some value out of this. And if anyone has questions, feel free to reach out to me.
Yeah. Tim, do you mind putting your contact information in the chat? I'm actually in the East Coast as well. I'm in Maryland, so we're not too far.
Yeah. Okay. Let me see if I could do this. I'm just gonna put
Your email on phone is fine. And Peggy, I have my partner who also has a passion for he wants to create either I don't know what it's gonna look like, a book, nonprofit or something, but he wants to teach financial I guess I don't want to say literacy, but he wants to focus on teenagers and
I
money and
lost it again.
uh,
Oh,
Unstable.
we still hear you. Do you hear us? Oh, no.
she might have froze it up.
Yeah.
Yep. I'm going to go buy a backup battery as soon as we are done here. So
Good
that
idea.
I had Spectrum out here yesterday. I bought a battery from them. And they said, oh, that doesn't stop your electricity. It only works for the modem. It doesn't work for the tower, which of course is the part you really need for your computer. So going out and buy a backup battery as soon as we're done here. Anyway. Yeah, Freddie, set up an appointment. I'll be happy to have a conversation with him.
I will.
That'd be great.
Do you have like a Calendly or what days works best for
Yeah,
you?
calendly.com /Peggy Beau, Beau. That Peggy.
Okay.
first 4 letters of my last name.
Great.
Yep, that'll be great. Anybody else have anything? So thank you everyone for being here.
Thank you, Tim. Nice
Just
to meet
My
everybody.
pleasure. Thank you, Chris.
And it's been really, really great. Really, I learned a lot, and thanks for playing. It was really fun.
Enjoyed it, Peggy.
My
Thank you
pleasure.
for the invite.
Thanks for having me.
Thank
Nice
you.
to meet you all.
Look forward to meeting you.
Yep.
Take care, guys.
See you all next week.
Great. Bye-bye.
Bye.